recently, Snowflake reported their first quarter earnings as well as had an investor day, and yet the stock can't seem to catch a break. If you look at the stock price, it recently made new 52-week lows, which is causing some investors to wonder, is this potentially in the bargain bin, or is this beginning of a downtrend for Snowflake stock? We'll cover all of this and more. If you enjoy educational investment videos, you're watching Unrivaled Investing. I do appreciate you hitting that thumbs up, hit that subscribe button. So let's dive right into understanding what is going on with Snowflake. Well, I previously did a video covering what is going on with the business. I did like to see that there were two insider purchasing transactions. Some might argue they were forced to do it, but either way, I like to see it when management or board of directors is getting some skin in the game buying stock. And this includes the new CEO. And so that is good to see. I also called out in the last video that it was very likely that they were lowballing their guidance for the year. And I'd argue that this 22% figure that they originally put out was just way too low. Then they delivered first quarter results with 34% growth, blasting it out of the water relative to that 22%. Investors like to see that. Investors also like to see the strong free cash flow growth. Now, free cash flow, this is largely from stock-based compensation, so I don't give them full credit for that. That said, last year, first quarter, you're talking about $280 million in free cash flow. This year, closer to $400 million in free cash flow. So you are seeing an improvement in free cash flow. Also, another key metric is with their AI data cloud, which is where their customers are sharing proprietary data with other customers, making their platform increasingly sticky. Over 32% of their customers are sharing at least one data source with other Snowflake customers, and this marketplace of listings grew 6% sequentially. So this is a very strong part of Snowflake's business that I like to see. They did revise higher their outlook in terms of their guidance for the year for their revenue, but they also lowered their profit margin expectations, which disappointed investors. This is part of the reason why the stock has been in the doldrums. Part of the reason why is management's talking about enterprise AI investments, where they're saying, yeah, it's not really going to drive any revenue this year, but it is going to have a negative impact on our gross margins and profit margins. That said, don't worry about it in the long term. In the long term, we're all dead. Or maybe not with a singularity. In the long term, it's all going to work out because we're going to generate a lot more revenue and profitability. So isn't this wonderful? Now, another key aspect on why the stock has gotten beat up is I'd argue softer than expected results, where management said, look, things can always do better, and maybe a little bit slower than where we thought. February and March were very strong relative to what we were forecasting. April came in there. Yeah, April came in there. May is about the same as what we were forecasting. We don't see this massive slowdown in any way. You can read transcripts in their full detail at AI Ticker Chat completely for free. But this transcript, which is from their investor day, does suggest softer than expected results from Snowflake, and they're not the first one. I've done previous videos calling out how Salesforce, also UiPath, has also talked about a recent slowdown in business-to-business or enterprise-related software subscriptions. And some folks are wondering, or software purchases, because Snowflake is more of a consumer-driven model. Some folks are wondering, is this because of the AI revolution, where businesses are saying, wait a second, with AI, shouldn't we be getting more for less? Or maybe we need to set aside more for our AI budget. That means sort of crowding out our historical legacy expenditures, so spending less. So there are these dynamics that make you wonder, is this beginning of some sort of recessionary slowdown, or is this just due to a pause with businesses saying, you know what, let's just reassess our budgets because it's a changing environment. That said, not seeing a massive slowdown. So where will Snowflake go from here? What are my thoughts on the current valuation for Snowflake? First of all, in full disclosure, this is not financial advice. Also, recently, a premium member of the Unrivaled Investing community shared on our exclusive Discord. This is a direct quote. Currently, the profit I have made thanks to called out ideas from Daniel can pay for 30 years of subscription, but the most valuable part has been the learning experience. I've been a very satisfied member since June 2022. Since then, I've never doubted to renew. If you're looking for compelling investment ideas, also educational materials, come check out unrivaledinvesting.com. I did make 2 separate educational courses, one on how to understand financial statements, and the other is how to value stocks, both based on my own experience working on Wall Street, what I wanted to know. So as we zoom out, thinking about Snowflake, it's worthwhile to think about, like, what do they even do? So this is a cloud-based platform as a service that makes it easier for enterprises to store, access, and analyze their data all in one place. And this is part of the investor day that investors liked, which was that they were saying, look, our addressable market is just monstrous. 150 billion in calendar year 2023. In the next few years, this is going to be a $300 billion plus market. And by the way, our customers are increasingly spending money on our platform, whether they're our top 25 growing from 12 million in revenue to 22 million, or that, let's say, they're the Forbes Global 2000 customers, spending $800,000 to $1.6 million. So this is a huge opportunity where customers are increasingly spending on their solutions. When we think about the quality of Snowflake as a business, I turn to AI Ticker Chat, run the scorecard, and it gets I'd argue, a mediocre score, because their profitability stinks and their track record as in terms of generating attractive shareholder returns is also lousy. The summary, I think, gets it, which is that they show strong growth. There's a solid cash position. They have a solid, positive outlook, though profitability and associated competitive risks. How come they're not significantly more profitable? Well, I'd argue a big part of it is competitive dynamics and dealing with the executive transition with the new CEO. These are all things to watch closely. That said, they are making investments with AI that could drive future success. Let's see how this goes. I'd say overall, this is not a super compelling score of around 6.6 in terms of the qualitative assessment of Snowflake. As we think about the hypothetical valuation framework, of course, stock price can go higher or lower for Snowflake. I think looking at this, that this is not a deeply compelling valuation. Could the price go up, let's say 100% over the next 5 years? Yeah, it's possible. But let's look at what it would take to do that. In order to do that, you would need 30% annualized growth for the next few years. You need 32% profit margins. Keep in mind, they just lowered their profit margins, and it's still around 0% on a GAAP basis. And you need to have 40 times earnings multiple 5 years from now in order to get around 100% upside. That's just not that crazy compelling. I mean, on a price to sales basis, you're talking about a teens level. This is not dirt cheap, even though it's on the 52-week list. If I, had to pick, is this the beginning of a rebound where it's a bargain because 52-week low, or is this beginning of a downtrend? I would be inclined to say that this is a beginning of a downtrend for Snowflake stock, even though I do like to see the management, getting some skin in the game, buying shares. I just don't think the valuation really justifies the underlying fundamentals. After all, just this past week, I called out a company to my subscribers at Unrivaled Investing that has very similar metrics in terms of growth that has Snowflake, but if you look at Snowflake, if they had 30% profit margins, which they do not, closer to 0, then, negative, then it would be at 55 times earnings. There are companies growing at the same speed as Snowflake, arguably faster, trading at a teens multiple. So I just think that there are better bargains out there if you're willing to look for them. I just don't think Snowflake's quite there yet. If you have a different view, I'd absolutely love to hear it. Clearly, they're tackling a huge opportunity. They talk about that addressable market being hundreds of billions of dollars over time. Clearly, they're taking market share. The stock could do well. That said, it just doesn't strike me as something where it's like, oh yeah, it's going to be 10x higher in the next 5 years. That strikes me as unlikely. If you have a different opinion, once again, would love to read it in the comments below. Thanks so much for tuning into Unrivaled Investing. I hope this video has been helpful for you.